The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the weekly perspective for the week ending 9 December 2022. Well, let's start off on Kitco with gold. And this is from Gary Wagner. Does good technical work, and he's showing you here, as the title shows, gold trades to a double top at 1825. Using candles, which are actually a really good method, but some people put a little bit too much credence into them, but certainly they are of value. I won't read the article. I just want to point out that you can make an argument that gold has double topped on the intermediate time frame and could be looking to maybe test the 1740 level or so. All right, next up is Heraeus, a big refiner. They did a gold forecast and others I'll get to here. I'll just show you the highlights. You can find this on the web. It's talking about a lot of things that affect the gold price, as we all know. A shift in monetary policy by the Fed could ignite gold, basically talking about the inflation rate. Central bank buying is expected to remain strong. Mine supply could creep up or increase next year. Jewelry demand could struggle to match the 2022 levels in next year. And investment demand in the ETFs may pick up again. So the last paragraph is kind of where the meat of all that is, and the direction of the dollar will determine the potential for gold price gains. I will agree to a level, but as I've said so many times on the debt pyramid, the run to the dollar will precede the big run to gold. But the run to gold has started, just stealth. There isn't a lot of people paying attention to how much gold has been accumulated by the central banks, China, Russia, etc. So that continues. And the bottom line here is in bold, gold is forecast to trade in a range between 1920 and 1620, according to Heraeus. I will suggest that it could go higher. I think we could see in the 2000s. We already saw that this year. And we could see something much, much higher, dependent upon the financial system. If it breaks down further, scares in the market, and everything else. But I don't expect 2023 to be a stellar year. I expect it to be a good year. So the same article from Heraeus, and this is looking at their silver forecast. Demand continues to rise. Electric and electronic demand is expected to grow modestly. It talks about smartphones. Trend continues into 2023. Photovoltaic demand is forecast to grow as unit costs drop. That's, of course, solar panels, which right now, the PV market, as it's abbreviated, is about 10% of the silver market. Silver jewelry demand may slip year on year. Just as I said, gold, probably true. Silver mine supply is predicted to grow incrementally in 2023. And they say the silver price has been subdued this year, mainly to the strength of the U.S. dollar. However, looking at a rally in silver prices, they expect to see the silver price forecast for 2023 is between 25 and 17 in 2023. Again, my perspective is that I think we can get above 25. I think we could certainly hit 30 or beyond. Just, again, depends a lot more on the black swan or stuff that the mainstream financial press and the establishment. Heraeus is, I consider, part of the establishment. They're a wonderful company, but they're going to be very, very conservative. And don't look out to the actual possibilities that I see and have commented on time and time again. That doesn't guarantee they're going to happen next year, but we're getting closer every day. And next up is from the LBMA, London Bullion Market Association. Dr. Jonathan Butler, he's the business development for Mitsubishi. I consider this to be accurate as far as what he's showing here. And remember, this is from the LBMA. So what he's doing is making a case, and I'm scrolling, hopefully not making you too upset here. But there's several graphs. You can read this whole article. It's probably worth looking at. What he's showing here is from 2007 to present day, and he's showing what happens with interest rates, real interest rates in blue and gold. And he's showing this graph, which you can draw your own conclusions from just by looking at it. What he's not showing is what it looked like in 1980, through the 70s and into 1980, which is very similar to the economic/financial conditions that we have now. So if you want to compare apples to apples, what you really want to do is compare an apple to an apple. You don't want to compare an apple to an orange, which is basically what he's done here, in my perspective because we have much different climate after the 2008 financial crisis and the financialization of everything, the amount of paper printed and on it could go. So if you want to look at what the truth is in identical, I won't say identical, but very similar conditions, then look back to the 1970s to 1980. And what we saw, as I've said so many times, is Volcker had to put the interest rates well above the actual rate of inflation to quell the markets. And there was a lag. There was a lag between the CPI going very high and the peak in gold prices. So bear that in mind. If you use the same lag, I think it's about 2 years. So if we have peak inflation at, say, 10% officially and, say, roughly 20% by shadowstats.com, and that happened 2 months ago, you might look out a year or two before we get the peak in gold. That's just history repeating itself. It doesn't exactly repeat. It rhymes. I'll look real quickly at silver, and I'm going to call it a day. So from Business Line, India silver imports top 8,000 tons as consumption for jewelry rises, which is a bit contradictory from what I said in a previous article, where jewelry demand for gold and silver will subside somewhat next year. And that's true. I don't know the future. Could be. What we do know is India has been on the gold train for a very long time. As they became wealthier and wealthier, several consumption of gold increased above and beyond what it had been in previous decades. But they are returning to silver, so I'm not going to read the whole article. Just think the title or the headline is sufficient, but it's a good one to read. And now I'll make this the last up here before I do a promotion. There's been a mysterious drop, I don't know if it's mysterious, in silver stocks on major international trading platforms. That's created quite a buzz. Could it make the silver price surge next year? Here's what you need to know. And it goes through the LBMA and the COMEX, which anyone that watches my channel is pretty familiar with, what happened with the silver. So here's the deal. Recently, there's been a record number of withdrawals from the trading platform. What is the BMA? What is the COMEX? It's all very basic, elementary stuff. What is the registered silver supply? Most of you know that. What happened during the silver squeeze? Retail investors, encouraged by Reddit, piled into the market in an attempt to push the silver price up. The demand was so high that almost $1 billion flowed into silver-backed ETFs in a single day. Well, the truth is that the amount of silver traded in the paper markets is unbelievably large every single day. And then that's what he's talking about. It's not talking about physical silver, but he doesn't really explain that. I mean, if you look at how much silver paper is traded in a year, I think it's in the trillions or it's crazy. And it's just paper flying back and forth. Talks about the short squeeze. I'm not putting this article down. You can make your own opinion, but it's very interesting. Now, here's some people I respect. I really respect Mike Dorenzo of the Silver Institute, but it's a little more on the establishment side than I am, and I know that, and Mike knows that. And he says, after several years of recording a surplus, we saw the silver market transition to a deficit in 2021. This year, the market is forecast to see a much larger deficit, which they put that out recently, and I commented on that on a previous weekly perspective. Importantly, we expect the silver market to remain in a deficit for the foreseeable future. So you can continue on reading this. There's really no bottom line. It's a pretty good look for the layman, but there is a few caveats that I made from my perspective. If you type in silver123.net, that's silver123.net, you'll get this page. I have a short video here. We did a Black Friday deal that we started on Black Friday. It will continue to the last day of this year. We're giving you $200 off and 15 minutes with yours truly. It won't be one of the staff. It will be me. And we've got another 20 days for this offer. So if you're interested, you can go to silver123.net and you can take advantage of this. And that's it for this week. This is David Morgan of themorganreport.com. Signing off. I'll have another weekly perspective next week.